What's up, traders? In this video, I will be revealing all the secrets that you need to know about 20 and 10 period moving average secret. Now, as you have seen in my chart all the time, there is only two indicators, that is 20 period and 10 period moving average. And many of you always ask a question about these indicators. So today I have decided to reveal everything you need to know about 20 and 10 period moving average. Sound interesting? Then let's get started. Okay guys, so before I begin, make sure you smash the like button, hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. So let's first begin with placing the indicators on the chart. If you don't know how to place an indicator, then just this is TradingView platform, you know that, but whatever platform you are using, this indicator is very common. So go to this indicator section, click on it, then search EMA or exponential moving average. So you'll find it. If you click it, click twice so that we have two. So as you can see that on the chart we have found two moving average. Click on this setting button, then go to the style, this input. So the first one we will be using 20, as I have already have one here, so 20, and the next one that we will be using is 10 period moving average. So if you go give the length 10, and for the 10 we will keep the style, that means the color will use red so that we can differentiate them. So these are the two moving averages on the chart that you have seen. So let's begin with the first secret that you need to know. The first secret for 20 and 10 EMA is that it provides you added confirmation for the direction of the trend for the short term. So what do I mean by this? The meaning is very simple. If you see a market in moving in one direction, such as this one here, okay, the market is pushing to the high with a high speed, then if you see that at some point 20 EMA, this blue is 20 EMA, as you know the red is 10 EMA, 20 EMA below the red 10 EMA, that you'll consider as an uptrend. As I told you, always you will find the direction of the trend by applying the market structure. Market structure is only the reliable way you can find the direction of the trend. But once you found the market structure, if you use this 20 and 10 EMA, it's more added confirmation that is more reliable for you to find the direction of the trend. So normally on the short term, but here you see there where there is a choppy market, this method will not apply. When you see the market is choppy, then what you see that the 10 and 20 period moving average going up and down. But when the market in one direction, either up or down, at that point, if you see that blue, that means 20 is below 10, it is considered as an uptrending market. So only buying in this market. So vice versa, if you see that like this one here, a market moving with a high speed, as soon as moving averages crosses each other, okay, crosses each other, that means that the blue is above red, 20 is above red, that is considered as the starting of downtrend. So this is the first secret that you can find in 20 and 10 EMA. Now let's find out what is the second secret of 20 and 10 EMA. Now 20 period and 10 period exponential moving average is used by many traders. It's a very old indicators, and this indicator, both of them used for the crossover trading strategy. So what is a crossover? Many people use 20 and 10 EMA crossover for finding entry. That's why you see there is a nice trading opportunity here. So what does it mean? Let's say you see that market is going up with a 10 period is up and blue 20 period is down. At some point you might see that the market reverse like that. Okay, at some point the market reversed, and at that point, at some point, moving average also cross each other. So as soon as moving averages crosses each other, that means that at some point when the downtrend started, you will see that at some point like this one here, 20 period will be above the 10 period, and many traders consider this as a change of trend confirmation. So let me show you here. Let's say the market was moving here in an uptrend, blue is down, red is up. Okay, and then what happened? At some point the market in a choppy environment, okay, and then went above. Finally what happened? You see that the price has created a double top here and then finally broke down. So here you see the price, basically the 20 and 10 EMA crossed each other, and here also the same thing, the 20 and 10 EMA cross each other. Here also 20 and 10 EMA cross each other, and all of them could be a winning trade if you have a proper strategy around it. But the main thing is that, as you can see, that when this moving average, you see, until blue is down, red is up, it's an uptrend up to here, and then what happened? At some point the red came down, blue came above. So from here it is considered the downtrend started. The price came down well below, and again the price started to push up. Okay, at some point here you see there has been a crossover again and the price went above. So as in all cases, what we see that as soon as the moving average crosses, there has been a surge of price down. You see there is a huge move started as soon as the 20 period crosses the 10 period. It's a huge indicator, as I told you. And as soon as here, the same thing, as soon as the price cross each other, there has been a huge surge of buyers happen, big move to the upside. And then finally the same thing here again, when the 20 crosses 10, 20 EMA went above the 10. After this green candle, there has been a big move to the downside. So this is the second secret, that when moving average crosses, the trend changes, sentiment changes, and people, based on this crossover, many people use this strategy for buying or selling the market as the market sentiment changes after the crossover of 20 and 10 period moving averages. So now let's find out the third secrets of 20 and 10 EMA. Now the third secret is that when you see for an extended period of time, okay, for an extended period of time, the price is away from the 20 period moving average, then at some point you will see that the price will come back to this 20 period moving average and will test this one and will have a rejection. So keep in mind, this is very, very important. This education you will not find anywhere, so make sure you pay attention and try to understand what I'm telling. So if you see that for an extended period of time, the price is away from 20 period moving average, that's why 20 period moving average is considered as a rubber band. So when you stretch a rubber band and if you release them, it quickly go back to its original position. So 20 period moving average is kind of rubber band with the price. When price is not hitting the 20 period moving average for an extended period of time, high probability that when the price will come back to the 20 period moving average, will hit that and will test it and will have a rejection. So let's see a couple of examples. This is really huge that you know that. Once you know that, it will be a big advantage in your trading. So let's see a couple of examples what I'm telling. Look at this one here. You see there is a test here, 20 period moving average. This is 4 hour, and we'll see different time frame as well. After this test, what you saw that the price started to stay away from this 20 period moving average, getting separated from this 10 and 20 period moving average for an extended period of time. And at some point, what you have seen that the price went above, tested this 20 period moving average, and then rejected to the downside. So when you see this extended period of time, first time when the price is testing, high probability that it will have a rejection. So let's see a couple of examples in different time frame. So you see guys, this is gold on daily time frame. See the power of this concept you see gold on the daily time frame, there has been a crossover here, 20 period and 10 period, and the price broke down, and then slowly went above, okay, tested this 10 period and then broke down again, and finally what happens, see the price did the same. The price for extended period of time, this is daily time frame, how many days, 1 2 3 4 5 6 7 8 9 10 days, the price was slowly going away from this 20 period moving average, and on the 10th day, as soon as the price just touched this 20 period moving average, there has been a huge sell-off happen from this zone, and the price made this low on one day. There has been a big move. Second day as well, we have seen that the price dropped. So this is the very, very important thing that you know about it. This is a huge secret about 10 and 20 period moving average. So now let's see what is the fourth secret of 10 and 20 period moving averages. The fourth secret of 10 and 20 period moving averages is that they act as a dynamic support or resistance or a trend line. So what do I mean by this dynamic support or resistance or a trend line? See, when we define a market, how do we define it? We define it as a straight line like this. We say that the market is moving in one direction and then correction and then another move and then another move. So this is the typical, say, market structure for an uptrending market. So when we define it as a straight line like that, okay? But in practical, you may never find always a market moving in a straight line. So when we define as a straight line, we find a straight point where we can say, okay, this is the support, okay? This is the support and this is the trend line. It's a nice, easily understood, right? But in practical, you may never find a market like that. You always will have some variation, something like that, maybe something like this, but the basic is same, but the market will move in a bit, distorted fashion. Then how do you define in that situation that trend line, support or resistance? And that helps this 10 and 20 period moving averages. They act as a perfect dynamic support or resistance and trend line. So let's see a couple of examples what I explained so far here. Okay, so let's see this example here. Okay, what you see that this is the same gold, it's also daily chart, and what you have seen, see gold has broken up, came down again, so it's a nice uptrending market. It's a clearly defined uptrending market, okay, creating a series of higher high and higher low. But when you find this kind of market, it's not fully as we define. There is a lot of wave in it. But if you look at this 20 period moving average, you see the price nicely supporting with this 10 and 20 period moving average. It's exactly moving along the direction of the trend. So it is providing a nice support here, both of this 10 and 20 period moving average, and then the price broke up, came down to the same level of support. This 20 period moving average nicely supported these candles, and you see this, if we draw a straight line, we will never be able to connect all these points. You see, this is a very difficult to connect all of them in the trending direction to draw this trend line. But when you use this moving average, it will give you a nice level of support here, and with this 20 period, it's just nice, created a nice support. So everywhere where you see that, and also here with this 20 period moving average, it is giving you a nice direction of support, but without giving you any straight line. Wherever the market is moving in the wavy fashion, the moving average is reforming its structure to give you the nice level of support or resistance. So you can find it everywhere. You see, this is the same situation with the gold here. You see, this is daily chart. The price is nicely supporting this 20 period moving average. As soon as the price crossed, you see, it created a series of lower high and then broke down below this 20 period moving average. The price came back to the same level, created this dynamic level of resistance, and this same thing happened here, you see. So the moving average has given a nice resistance to the price action. So this is the fourth secret of moving averages. What is the fifth secret of moving averages? Averages is that you see that market either respecting 10 period moving average all the way, or respecting 20 period moving average all the way. So what do I mean by this? It means that when you see a market has a huge momentum, let's say with a huge momentum, a market moving in one direction to the uptrend, then you might find that the market is respecting only 10 EMA and it will continue to respect. So once you saw that the market is a high momentum, moving with a high speed either to the upward direction or downward direction, you might find that the price is respecting this 10 EMA all the way. On the other hand, if you see that the market is moving respecting the 20 EMA, then you might find that in most of the cases it will respect this 20 EMA, as the market trend is not that much with high momentum. So what do I mean by this? Let me explain. Let's say, first of all, look at this market here. You see there is a 10 EMA and 20 EMA. Now you see the price was moving with a huge momentum to the upside, and then the price came back here, respected this 10 period moving average, this red one, and then closed above. Okay, the next one, the same thing. From this 10 EMA, the price pushed up. The next one came down to the same level of support, dynamic support, as I told you, pushed up. So every time you see the price was respecting nicely this 10 period moving averages. So it's a huge advantage when you know these things. Now look at another market here, the same market. Look at this here. Once this 10 period is crossed and also 20 period is crossed and the price came well below this 20 period moving average, the price started to respect this 20 period moving average. You see the price created this doji here, there is a green candle here. Now every time the price is creating this 20 period moving average, just respecting this 20 period moving average all the way to the up. So we can see the same pattern wherever you want to see. When in most cases when there is a high momentum, huge trend, you see this is the same thing here. The price was just above this 10 period moving average, respecting this one and then pushing to the upside. The same thing here, the price was just you see in this case the price was not respecting this 10 period moving average. When you see it's not respecting, you might see that it's exactly respecting this 20 period moving average, and the price just touching this and pushing up, touching this, pushing up, touching this, pushing up. Okay, so when you see a market is respecting 10 period all the time, it's likely that not infinite period of time, in majority of the time it will respect this 10 period moving average until it breaks and then started to respect 20 period moving averages. So these are all secrets that you need to know about 20 period and 10 period moving averages. I sincerely believe that this important video is helpful to you. If you find value in it, smash the like button, and also don't forget to hit the subscribe button, press that bell notification so that you don't miss out any of the content that I released every day, including live analysis, live streaming and live trading session and educational video like this one. Thank you for watching. See you soon in my next video.